very busy morning actually, and some of the most movement we've seen in the markets in a long time. So just wanted to quickly jump on and do like a 5-minute wrap up of exactly what has occurred. It just so happens as well, and I'm sure this also plays into investor psyche in a way, especially when the markets are so overstretched like they have been in US equities and they've reached that 23,000. And it's obviously the 30th year anniversary of the flash crash, if you like, the 22.6% fall that we had in the Dow back in '87. But looking this morning, and obviously it's the equity sell-off that really initiated this, and we were looking in the briefing earlier about this elevated area of which the US equity market had really rallied yesterday. I mean, this area here was really yesterday's session, and it was when we breached 23,000 in the futures, it was just one-way traffic to the upside, and it just continued all the way up to the close. We tested it again in the Asian session, but as soon as Europe stepped into the market, some profit taking started to take place. You started to throw in the mix some negative corporate earnings, likes of SAP in particular, talking about significant headwinds that's going to affect their Q4 performance and profitability. Unilever were down about 3% as well, earnings related. And then the latest kind of thing as well that you've had to add further negativity has been a further breakdown in the situation in respect to Catalonia and the Spanish government and how they're responding to that. So just talking this through, equities started to really edge lower, but then as soon as some technical levels started to be breached, and this was something I was talking to the guys about at the point of when this sell-off was happening, was this psychological 23,000 handle. I mean, if you were shorting this market and it's moving quite fluidly like it was, then the logical place to take this to is back to where it began. And psychologically, that 23 is obviously a significant handle from that perspective. As soon as it breached that, a large cluster of stops just getting hit, and then we saw that big extension on that wick lower, and now we've recovered. This is definitely what tends to happen when the market moves like that in a very aggressive fashion. It's almost self-capitulating in a way. Momentum starts to pick up, the market gets hit, and then now the market goes into this kind of a pause for breath, if you like, to regather itself, because yes, there are negativities, but it's almost also a function of market behavior when the market starts to move quite quickly like that. Consequently, in the other equity markets followed suit. The DAX obviously broke the weekly low, which was here, and then we also broke the low from Friday there, and then the market obviously going through these levels, extending on those losses at that time. So interestingly, we found a little bit of support around the low that was seen on the 10th you'd have to go back to, and now we've flicked back up higher, back in toward that trading range of the week on the lower bound. So definitely fed through across the board. What did this mean for other asset classes? Well, risk off, so further fueled gains in gold. Gold was kind of bid since Europe stepped in, but really gathered some pace when the equity market started to pick up some momentum on the downside. Straight through pivot, which was really the overnight highs, and then we went through late yesterday evening or yesterday afternoon, or not even yesterday, this was yesterday afternoon we breached that resistance level, and then we saw a bit of an extension, and now again as the market's kind of just started to gather itself, we've had a slight recovery but still elevated on the day. The FX move has been byproduct of some other things as well. Traditionally, you typically see a bit of a move in this situation to the dollar as the global reserve currency, so the dollar already looking a little firmer amid this equity slide, but then throw in the mix the euro move. So the euro saw 50% of this move came on the back of a single headline, and this was it. So this game of brinksmanship coming to a kind of precipice, if you like, today, significant because it's the deadline that the Spanish government put forward on the back of Catalan to force them to make a decision on whether they're going to call their independence. And this was the headline: Spanish government to proceed with suspending the Catalan autonomy. So this was quickly followed with a Reuters source suggesting that they're going to invoke Article 155 at the weekend on Saturday after they receive a formal letter from the Catalan president. So they'll snap lower in the euro as well, so further fueling the kind of dollar index. And then on the straight after that as well, economic data out of the UK. UK retail sales came in at minus 0.8%. Expectations were for just minus 0.1. The X number considerably weaker than expected, and also downward revisions to the previous. So if we go back to the charts, we had cable also under some pressure. And you can see here we broke technically the low that was seen from yesterday morning. And we've seen an intraday low now down at 131.50. So certainly bearish factors are mounting, irrespective of the fact that the market's still heavily priced for the Bank of England hike in November, because you've had the ongoing squeeze on the consumer from a lackluster wage point of view in the context of rising prices for inflation. And now you're seeing that really play out in the retail sector, which of course is critical to the performance of the UK economy going forward. So yeah, it just makes it all the more tricky. And obviously in context of Tuesday's dovish commentary from the likes of 3 Monetary Policy Committee members of the decision making that's to come from the Bank of England in 2 weeks' time. In terms of the UK retail sales, the 3-month year-on-year retail sales growth is the slowest in 4 years now in the UK. And then, obviously, one of the main lingering factors as well that we need to be aware of today is the EU summit. And at the moment, it's likely that the summit will conclude on Friday with a complete stalemate, which is also obviously another negative factor as the political influence starts to probably become more powerful the more the timeline continues and we get closer towards the eventual passage of the period of Article 50. Okay, so hopefully that was a bit of an update of what exactly happened. I mean, we've been waiting for this type of volatility as intraday traders for such a long period of time. It's been, thank goodness it's finally arrived. And just want to quickly show you a couple of trades that some of the live guys did here on the floor. Well, some of the live guys from home actually. The remote traders, Fez and Michael in particular. I know the guys here. I know Jay, Mike, they've had some excellent trades. Mike on the short and the euro. I was very pleased to see the way he held that short over some of these Spanish comments when they were coming out, and then he scaled out of that nicely through pivot on the exit. So that was a very job well done. And so just looking at Fez's trades here, this was again playing that kind of flight to quality plate. So we were looking at Fez here trading gold, and so when this equity sell-off started to pick up some momentum, just using technically these relevant support points to enter the market long, and then exiting out on a fib level, and then looking elsewhere. Then on the reverse, the Nasdaq he was trading here, so looking to enter when it looked like those other indices were starting to pick up some downside traction. Just talking through his trade. Obviously he's in the chat room. I think he's actually left now, now that his job's done, so to speak. But breaching that level, scaling out of the position all the way down to then exit. So an excellent trade there. And I know Michael was also involved with a trade as well earlier on, if I can find it. But the really great thing to see here is that obviously volatility has been relatively few and far between when it comes to the S&P in particular, but this was a great conversation here on the left hand side. This was Fez, I'm done for the day. Michael, who's actually based in Spain, me too, have a great day. And if you check it out, it's not even 9 AM. But this is really good from an execution point of view and also discipline. These guys are both kind of graduates from the Amplify program. I think Michael and Fez probably 3 years ago when they did the Amplify program. They're both now trading their own accounts, futures markets, and so just good to see them taking full advantage of the opportunity that arose, taking it with conviction and then executing. This is kind of what you wait for as an intraday prop trader, in and out, and now they can go away and enjoy the rest of their day. And so a real excellent job. And I know that obviously it's taken these guys have been trading now post leaving us for a number of years, so obviously the experience does help, but really great to see some of the guys here in the third stage of the career program also doing likewise. All right, enjoy the rest of your day if you are sticking around. I'll be around for the rest of the session. Thank you.